One of Australia's largest investment managers has admitted contravening the Corporations Act and is promising to repay thousands of affected Australians. The corporate regulator has taken Macquarie Investment Management to the federal court after the Macquarie Group subsidiary admitted it did not act efficiently, honestly or fairly by failing to place its collapsed Shield Master Fund on a watch list for heightened monitoring. Now let's get more on this. I'm joined by business editor Michael Yanda. Michael, how did this court case come about?
Well, Gemma, it goes back to the collapse of this investment management fund called Shield, which was pitched to thousands of people as a superannuation alternative with higher returns. It was hosted, amongst other things, on Macquarie Investment Management's Super Wrap platform. And what ASIC has alleged here is basically that Macquarie didn't really do enough due diligence about the quality of this fund and how it was being run, where the investors' funds were going. The presence of it on Macquarie's platform gave the Shield Fund a lot of legitimacy when financial planners were selling this to their clients. And so what Macquarie has done here is agreed to pay out the 3,000 investors who invested through their superannuation platform in this Shield Fund, which is now in liquidation, so the money is currently frozen in that fund. They're going to pay them out by the end of the month, so those investors will be made whole. They'll get 100% of the funds they invested back by the end of this month. In return, Macquarie will take their trust units in the Shield Fund, and as that liquidation progresses over the next few years, we've been told Macquarie expects to get back about 70 cents in the dollar. So they're compensating these investors a total of $321 million, but they do expect to get most of that back. Macquarie shareholders are likely to be out of pocket by about $100 million. In return, though, the corporate regulator ASIC is not pursuing civil penalties in the court against Macquarie, which it could have done. So it's kind of a quid pro quo deal where Macquarie is stumping up the cash to make investors whole, and in return, ASIC is not pursuing further action in the federal court.
And so, Michael, what does happen now?
Well, the investors will hopefully get their money back before the end of the month. That's what Macquarie has said. They'll get back everything they put in the fund. The problem is there were actually about 5,800 people invested in the Shield Fund, 3,000 of them through Macquarie. Most of the rest went through equity trustees. Last month, ASIC commenced federal court action against equity trustees for similar issues, which is not really doing the due diligence it needed to about this Shield Fund sitting on its platform, which basically encouraged people to invest in it. So that court action remains outstanding. ASIC has not yet struck a similar deal with equity trustees. There are about $160 million of investor funds that were put in through the equity trustees platform, and for those 1,800 investors, they're still waiting to find out whether they'll get all or how much of their money they're likely to get back.